Hello, everyone. Good morning from here, and depending on what time zone you are tuning in from, good afternoon and good evening to you all. I'm very excited, as always, to welcome you to the final edition for the month. I think. Let me see. I think today is the last. Okay, it's not. Monday is the last trading day of the month. So today is the last trading day of the week. And of course, we are going to be delving into the market as market participants gradually round off their trading activities ahead of the weekend and, of course, ahead of the month. Of course, we know during this kind of situations, there will be a lot of repositioning as the new month comes in. And of course, today we're going to be dissecting the market from both technical and fundamental perspective to understand what is going on in the market and of course use that information to strategically position ourselves for the next move. Then we're also going to be looking at how well the asset we are monitoring this week has been doing. For me personally, I'm roughly around break even for this week. I've not really been on my work desk throughout the week as I had a few days to trade due to some personal engagement. But today we are going to be looking at all of this together. So if you're a fan of any of the assets we are monitoring, you do not want to miss out on today's session. So I'm talking about the US All Sport, the USDJPY, and of course my favorite, the XAUUSD. And for those who are joining me for the first time, you're highly welcome on board. This is the Forex Morning Mastery. My own name is Sheriff Daramola, and of course, we run this session 3 times in a week: Mondays, Wednesday, and Fridays, 8:30 a.m. UTC and 9:30 a.m. West African time. Though today is a one of, we started a little bit late today. I traveled yesterday and I came in very late, very tired, woke up very late, and of course, that is the reason why we are starting late today. So you're all welcome on board once again, and I do encourage you to actively engage in the comment section. So with that said here, let's dive right into the business. And as always, the first thing we normally do is to keep tab with the situation around the US market dynamic, which is very, very important considering the asset we are looking at. There is no way we want to be trading the Japanese yen, the gold commodity, and of course the US crude oil without really understanding how the US dollar market dynamic is behaving. Now, what you see on the chart is the DXY, that is the US dollar index, and of course, we are looking at the 4 hours time frame. Now, here on the 4 hours time frame, of course, we captured the character of price action since the beginning of the month of May. That's about 2 months of historical data, and from a glance, what you will observe here is that the market has been on a strong downtrend. And of course, after looking at the structural detail, you can see that we have a descending channel, that is after connecting the series of lower highs and the series of lower lows. Now, something interesting happened last week, I guess. We saw price break out of the resistant line of that descending channel, and then we saw price climb, retested, climb back up this week, and we saw a massive move to the downside, giving us a signal that the US dollar is getting weaker. So today we are going to be looking at the possibilities of a recovery in the US dollar. Will the market deem the US dollar cheap enough to buy at this juncture? Or are we going to see a situation where the dollar will continue to decline, since it's right now within the descending channel, and of course below the resistant line of the descending channel, making it a sell territory at this point. Now, if we look at the fundamentals, and for those of us who are following the Fed chairman's testification before the US Senate, we can get the signal that he is not in a rush to cut interest rate, despite the clamor for cutting interest rate from the President of the United States and, of course, CEOs of business owners in that economy. He also went to say that the Fed is in a wait and see mode, waiting to see the outcome of inflation before behaving accordingly, especially after recent tariff impact on the US economy. Now, despite this cautious approach from, or let me say cautious tone from the Fed chairman, market are still betting on at least 2 interest rate cuts this year, with a 20% chance of a cut next month, that is July. Now, why is this? Well, the US economic data hasn't been doing very well. Economic data has been looking very weak, and of course, rate cuts are often used to boost the economy when things slow down. Now, let's look at the economic calendar here. So we usually we are focusing on the United States and the Japanese economic docket, and I want to include the mid-tier economic features as well. So let's have a glimpse of what is going on from the economical standpoint. Now, so far this week, we've had some interesting data from the United States. For instance, the S&P Global publications, which gives us an insight into how well the manufacturing and service sector is doing, recorded a massive improvement from what market participants were expecting. Though for instance, the service PMI came in a little bit lower than the previous month data, and the manufacturing sector came in just as the previous month did. But this doesn't seem significant enough to say that, okay, we had a massive increase in performance. Now, moving down into yesterday's trading session, we saw the durable goods order show some very good figures, as you can see here, but the gross domestic product annualized didn't show good sign. We saw a deficit of 0.5%. That means the US economy contracted more than expected in quarter one, shrinking by 0.5% and not the 0.2% previously estimated by economists and market participants. Then later on yesterday, what else did we see yesterday? I think, okay, there are no other. I think we also had the consumer spending. I saw a report on the consumer spending which showed signs of slowing down, the weakest since 2020, but I can't find it here. Where did I miss it? Was it on Wednesday? Okay, this is it right here, consumer confidence. But FX Street is not showing any figures here, so maybe they must have skipped it. I don't know what happened there, but from the report I got, consumer spending slowed down. In fact, it's at its weakest point since 2020, and this is not a very good signal for the US dollar. Then we also saw the initial jobless claim count, which fell slightly from 245,000 to 236,000, but continued to, but showed signs that there is a soft job market, adding more pressure on the Fed to consider interest rate cut. Now, today, all eyes are on the core PCE inflation data. So we have the core personal consumption expenditure price index, which comes in later today. That's 12:30 p.m. UTC. So that's about 1:30 p.m. local time. Now, what makes the core PCE an important event is the fact that it is considered to be the Federal Reserve's favorite inflation gauge. Now, if it comes in hotter than expected, it is expected that the dollar could bounce back and delay rate cuts. But if it comes in cool, that is, comes in lower than market had expected, rate cut expectations may grow stronger, weakening the US dollar even more. Now, from what we expect here, we are expecting on the month that the data will come in at 0.1%, just like the previous month. Then on the year-on-year, we expecting a 2.6%, slightly above the 2.5% recorded last month. So we're looking forward to see what the actual data will be. So that's coming in about 3 to 4 hours from now. Now, another thing that could also play a significant role is the political pressure on the Federal Reserve right now. The US president is reportedly considering replacing the Fed chairman before the election, which is raising concerns about the Fed's independence. Not a very good sign for the US dollar as well. And this adds uncertainty to the outlook around the US dollar, as market participants don't like political interference in monetary policy. Now, at the moment, it is quite clear that the dollar is weak. Traders are stuck between Powell saying wait and see, and the market is screaming cut rates now. In fact, it's a really, really critical juncture. And if you look at the chart here on a technical standpoint, you'll see that the last 24 hours has shown that the market is going through an indecisive phase as the market remains trapped within the $97.50 level and the $97 area to emphasize the prevailing uncertainty ahead of today's inflation data, I mean the core PCE, before a big decision is made. So in this kind of scenario, it is appropriate that we exercise patience and wait to see a significant breakout from either the resistance line of the range bound or the support line of the range bound to give us a signal of where price is likely going to end this week. So with this information we have gathered here, let's go right into the chart and let's see what is happening across the assets we are monitoring this week, and of course how the US dollar is influencing them. So as always, the first asset we are going to be looking at this morning is the what's it called again? The US crude oil. That is the US oil spot. As you can see on my screen, we saw a massive decline at the beginning of the week where price broke down both the key level and the two ascending trend line we spotted at the beginning of the week. And of course, as soon as price tested that area around the $64 level, we begin to notice a consolidation ahead of today's session. And this is not coming to me as a surprise, as we all expect extended sideways trading activities ahead of major events such as the US core PCE. And as it is, the US oil spot remains steady, and there's likely going to be some strong demand following situations around the fundamentals. Now, for instance, what is the major reason behind the strong sell we saw? Remember, we talked about the Israel-Iran truce, which reduced fears of supply disruption, and of course it takes away some of oil's recent risk-driven strength, and this went on to further cap the upside, pushing price to the downside. Now, recent development is beginning to shift in favor of the US oil spot. We saw the US oil stockpile fell by 5.8 million barrels last week, much more than 600,000 that the market was expecting. Now, this shows that there is strong demand in the market. Of course, when there is a drop down in crude oil stockpile, it means that technically the supply in the market was not strong enough to meet up with the demand in the market, so they had no other choice than to go into the stockpile to get oil to feed the demand in the market. Now, the demand I'm beginning to think of is the summer demand. We are gradually moving into summer, and most consumers usually go for summer holidays, and that means that traveling is going to increase, and this usually gives support to oil price. Of course, it's a simple economics. When demand increases, prices tend to rise. Then, to add salt into injury is the fact that the US dollar is still very, very weak due to rate cut expectations and speculations, making the crude oil cheaper for other countries to buy, which may likely help push price to the upside. And this idea of Trump replacing the Fed chairman is also adding uncertainty into the market, making the situation rosy for the US crude oil. And with a situation where we see the market go through a consolidation and sellers are finding it difficult to break through the $64 area, the question going into today's trading session is, will this be a platform that will send price retracing back into maybe structures such as the ascending trend line that was broken at the beginning of the week, maybe to retest it? And if we look at the distance of where price is right now and that structure, we're talking of a minimum of 500 pips to catch. Now, traders will remain cautious at the moment, of course, ahead of today's US PCE inflation report, which could indirectly affect oil if it shifts dollars sentiment. Now, to prepare ourselves ahead of today's trading session, I have a simple trading setup on the 15 minutes time frame to help us navigate this market today. And while I was looking at this chart this morning, taking into account the character of price action in the last 24 hours, I was able to identify an ascending trend line which captures the temporary bullish momentum we are seeing in the market right now. So we have higher lows connecting them, giving us this ascending trend line. And as long as price remains above this ascending trend line, we obviously want to be looking out for patterns and structures that support buying ideas. And that's what triggered me to buy the US crude oil this morning, though my positions are currently in a loss of about 40 pips thereabout, I think. Is it? I have a total of $5 in a loss. That's about 20 pips thereabout in a loss at the moment. But the fact that price still remains above that ascending trend line is a level of comfort for me to keep on holding on to that buy position. Now, the only condition that make me want to consider selling is for the ascending trend line to be breached and broken to the downside. Maybe something like this, a breakdown, retest of structure, then I want to consider selling. But since that is not happening and price still remains above the ascending trend line, I think is a reasonable idea to hold on to a bullish bias, and of course have your stop losses way below that level at the $65 area, giving enough breathing space for price action to move around. So this is my simple view on the US oil spot today. In a short term, I'm holding on to a bullish bias here. The fact that price still remains above the key level and sorry, the key levels at the $65 area, and that ascending trend line makes me confident of an uptrend scenario today. But if it happens that we get taken out of this position, price breaks down, retests the $65 level and the ascending trend line, then we want to start considering selling. So that is my view you have there. If you have any questions as regards to my explanations, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions before we move on to the next assets on our watch list. Stay tuned in, guys. All right. So I guess we are all on the same page. I can find no questions in the comment section. So I guess we all understood what I said and what the implications of the fundamentals and the technical understanding we have during the course of the session is to this market and how we intend to strategically position ourselves for the next move. So I wish us all the best of luck on the US crude oil. So moving on to the next asset on our watch list. So the next asset we are taking on is the USDJPY, that is the US dollar against the Japanese yen, which involves the economies of both the United States and the Japanese economy. And interesting enough, this week I missed quite a lot of opportunities in this market. First of all, I missed that significant buy move that broke out of the 146.725, though I was able to capture this breakdown here of about the 180 pips thereabout. And on Wednesday, I did not really trade. I guess I did not. Let me see. I think we had a new structure during our live session on Wednesday where we captured something on the 15 minutes time frame, isn't it? Where is it again? Let me see. Okay, so okay, yes, we had this structure here on Wednesday as well. We had this range bound structure where price was initially confined within the 145.00 and the 145.600 area. And of course, we said that we will be buying the breakout of the structure. I missed out on that one that morning, and then price came back, dropped down. So, okay, so we captured this. We had a sell stop triggered here. price moved about how many pips before it's snapped back into entry point. And as it is right now, it appears that the Japanese yen gained some traction during the second half of the week as traders bet on more potential interest rate hikes from the Bank of Japan. High still remains on the US inflation data. Now, from the Japanese economic docket, we saw inflation reports. Was it not yesterday? Yes, we saw it was on what day is this? Yes, yesterday, Thursday, we saw inflation reports which came in weaker than market had expected. But inflation is still well above the 2% target that the Bank of Japan is pegging their rate at, meaning the Bank of Japan might still raise interest rate again later this year. So the interest rate was 3.1, I guess, yes, 3.1%, a little bit lower than the previous month, which was pegged at 3.4%. But the fact that it's still higher than 2% is still a red flag that inflation is high. Then we also had the retail sales data from the Japanese economic docket yesterday, which shows that people spent less in Japan last month, which normally could weaken the yen, but traders are still focused more on inflation staying high than this temporary sales dip. Now, even with the mixed data, traders still believe the Bank of Japan may raise interest rate again, and this is keeping the yen supported at least in the meantime, especially if we consider the fact that the US dollar remains under selling pressure after poor economic data from the United States economy. So from the look of things right now, everyone is now looking forward to the US core PCE coming up later today, and it's going to be playing a huge role in deciding if whether or not the Fed will be cutting interest rate anytime soon. So at this moment, I'm expecting an extended sideways trading activity as market remain cautious, waiting for the data to come in before making any aggressive bet. And of course, as you will see right here on the 15 minutes time frame, this is duly reflected on the chart. This tells us the current sentiment in the market, and as you can see here, the last 24 hours have seen the market go through a consolidation, further emphasizing the prevailing uncertainty at this point in time. Now, if we consider the fundamentals at the moment, it is very, very likely that the yen may stay strong if traders keep betting on more Bank of Japan rate hikes and a weaker US dollar. So if that is going to be the case, then we want to be seeing price breakdown retest the support line of that range bound structure at the 144.200 area to incite a sell-off. So if we are going to be selling the USDJPY today, we want to see price break down that support line of that range bound structure. So we need to be very careful here, wait for that signal to come in, then getting after a confirmation to feel confident jumping into that position. But it's quite clear that the big move is not going to be coming until maybe closer to the time the USPCE report will be dropped, or maybe after the USPCE. But if it so happens that the dollar is favored in this situation, then we may likely see the dollar rise if the inflation report comes in higher than market expected, and this could trigger price breaking out of the resistant line of that range bound structure to trigger bullish ideas. So this is basically what we are going to be looking at today on the USDJPY. So let's exercise patience. Let's allow this range bound structure to mature. And when I talk about maturity, we want a signal to come either in the form of a breakout of the resistance line to welcome buying ideas, or the breakdown of the support line to welcome selling ideas. So that is basically what I am looking at today. And of course, I encourage you to mark out these key levels on your chart, as we are going to be using them as our guide for today's trading activity. So I do hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take another 5-10 seconds off. Let's see if there are any questions before we move on to the final assets on our watch list for today. Stay tuned in, guys. All right. I guess we are all on the same page at the moment, right? No question. So I wish us all the best of luck on the USDJPY. So it's important, let's exercise patience at this juncture. Let's wait for a signal to come in, confirmation, and then we jump in to the position. So kudos, well done to everyone. And I wish you all the best of luck. So moving on to the final assets on our watch list. So the final asset we are looking at is my favorite, of course. And that is the XAUUSD, popularly known as the gold spot. And of course, as at this morning, we continue to see price of the gold commodity continue to drop to the downside, as you can see here, as traders await the US inflation data. So definitely, like I said earlier, all eyes are on whether the Fed will cut interest rates or wait maybe for another extended period of time. And as a result of this, the market is looking a little bit consolidating in the last 1, 2, 3, 4, 5, 6, 7 hours. Now, what is the major factor behind this decline in the price of gold? Well, the ongoing optimism around the Israel-Iran ceasefire is calming the market. That means less demand for safe haven assets like the gold commodities. And the fact that traders are waiting for the PCE report, which is considered to be the Fed's favorite inflation gauge, which is due for, is it 12:30? What time did we call it that? Okay, 12:30 p.m. UTC. That's 1:30 p.m. local time. Is also usually when we anticipate major events like this, market usually reposition ahead of that. So like I said earlier, a hotter than expected reading might delay rate cuts, which could boost the US dollar and push the price of gold further to the downside. And I'm also considering not to go all in on a sell if we had to. So that means if we sell, we ensure that as soon as price moves significantly in our favor, we move stop losses and secure position, because we all know the dollar is very, very weak at the moment. In fact, it is near multi-year lows due to recession fears and expected rate cuts, and gold could take advantage of this weakness to push price to the upside. So we need to be very, very careful even while selling the gold commodity. I personally have 2 sell positions from the gold as at this morning. If you look at the bottom of your screen, you'll see that I have 2 sell positions triggered already, but with roughly some small profit at the moment, which is still very, very dicey if the sell will continue its route to the downside. So we really need to be very cautious. And then secondly, the mixed US economic data, that is, we saw the US economy contracted more than market had expected in Q1. So we talked about the expectations. Let me see again. Where is that one? So we saw a contraction of 0.5% as against the expectations of a contraction of 0.2%. So the US economy is not really doing very well. This is not favoring the US dollar at all. And this could be an opportunity for the gold to bounce from this particular area. So what I'm simply saying is that selling, if we are selling, let's ensure that we put up our protective caps on, as buyers could bounce anywhere from this area. And if you look at the structure we marked out on the 4 hours time frame, that was at the beginning of the week, you can see we had multiple ascending trend lines that captured the uptrend scenario in the gold market. And look at one, you could see price retrace back into one of those trend line in an attempt to continue the uptrend move. And if we look at the distance between where price action is right now and that trend line, let me zoom in so we can see things clearly. You will see that we have about 350 pips thereabouts, which is quite something you want to catch if price is really going to be going that far. Now, to prepare for today's trading session, I do have a simple structure on the 15 minutes time frame. So so this is it right here. I wonder why my chart is taking a long time to load. So I see here now, this is the 15 minutes time frame. Was it on the 15 minutes time frame I saw this? I think I saw it on the 1 hour time frame, then later scaled down to the 15 minutes time frame. So let's go back to the 1 hour time frame to capture what I am talking about here. So this was what I saw on the 1 hour time frame after looking at the character of price action in the last 3 weeks, I think, since the 9th of June, and look at how the 3,300 area was a strong barrier for sellers. So what this simply means is that that area usually or used to have a strong memory for buying powers. Look at how as soon as price comes in here, buyers come in to take price back to the upside. But now something interesting happened during the Asian session today. We finally, and of course for the first time in 6 weeks, price broke down the 3,300 and did multiple retests of that structure to the downside to trigger a strong bearish signal. And if we consider the fundamentals that is supporting the gold at the moment, we want to know if this is going to be a true breakdown or a false breakdown. Now, this is where the trend comes. Now, after capturing the character of price action in the last 2 weeks, you can see we have this trend line which has been supporting the downtrend scenario, though it has been a support line as price continues to find lower lows. Now, look at what's happening here. Price is back into that structure, and the last 3 hours since price tested this structure has shown that sellers are finding it difficult to break through that trend line, which for me could be a red flag that this could be a platform that could send price climbing at least for a short time. Now, so preparing for today's trading session, this is where our center of focus is going to be. So the question is, will price break down the trend line, or will this trend line be a support line, or let's say a platform that will push price higher? Now, to make things more clearer, I had no other choice than to scale down into the 15 minutes time frame where I had this sell that you see at the bottom of your screen. So now the sell position is back into loss, and this is what I'm seeing here right now. Look at the structure closely, and one thing you first of all notice here is how the $3,282 area had become a strong barrier for sellers. So first of all, we want to acknowledge that level, 3,282, right? So the last, let's see, 1 2 3 4, that's 1 hour. 1 2 3 4, 2 hours. Let's say the last 3 hours, you can see sellers, despite the strong momentum we've seen in the last 24 hours, sellers were unable to break down that structure. And it appears that this whole inability of sellers to break down the structures is evolving into a reversal setup in the form of a double bottom structure, where the 3,290 becomes the neckline of that reversal setup, as you can see here. And to help us validate this reversal setup, we need price to break out, retest the neckline of the structure. So if price can break out, retest the neckline at the 3,290, then obviously we want to be in for a move, right? So let me indicate that here. Where is it? It's taking some time to load. So I don't know why that is. Okay, I think it's finally come up. So I'm looking at the breakout retest of that neckline at the 3,290 to validate this reversal pattern. Then we can feel comfortable joining a buy. And if price goes ahead to break out, retest the 3,300, we want to be adding another buy position to maximize the potential of that bullish move. And if we look at the distance between the neckline and that 3,000, we are talking about roughly 100 pips. So what we do here is, as soon as price gets into the 3,300, we move all stop losses, secure some 40 to 50 pips profit while we wait and see if the market will break out the 3,300. If it breaks out retest, we are looking to add more. But if it gets here and buyers find it difficult to break through, this could incite a move to the downside. So it is important that as soon as price tests the 3,300, we move stop losses and secure the buy. Now, if that is not the case, that is, this whole structure here, if it turns out not to be a reversal setup and maybe it turns out to be a bearish continuation pattern. Maybe it comes out to form a bearish rectangle or a bearish flag, pennant, what have you. Then the breakdown retest of the $3,282 area will be a good confirmation to so for those of you who are yet to take a trade like me, like I said, I already have a sell position running, which is currently in a loss. I will not advise you to sell at this juncture, but wait for this breakdown of the $3,282 area before jumping into a sell, as a breakdown retest of the structure will confirm that that level can no longer negate selling pressure anymore. So let's see how the market is going to play out from here. We have a simple structure at this point where price is still confined within the 3,290 and the 3,282, where depending on the direction of the breakout will determine if we are going bullish or bearish. So there you have it, my simple look at the XAUUSD for today. So this is all I need to trade this asset today, and I encourage you to mark it out on your chart as well, as you will be needing them as a reference point to guide your independent trading decisions today. So that's my simple view of the gold market from both technical and fundamental perspective. Let's see how the market will play out ahead of the release of the US core PCE today. And trust me, if there is anything new that comes up later today, I will definitely update you on both my TradingView and Telegram platform. So it's on this note, I think we have come to the end of the gold analysis. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. Stay tuned in. All right. So I guess in the absence of no questions, we have come to the end of today's Forex Morning Mastery. It has been a great moment with you guys. I really appreciate your time. And of course, we're hopeful that today will make us some more profits in compensation for those we missed during the course of the week. And I want to wish us all the best of luck. For those of you who have been with me since the beginning of the session, well done to you. We were able to run through the USOILSPOT, the USDJPY, and of course the gold commodity. But if you joined in halfway, of course you didn't miss out of anything. You can still watch the replay of this live session immediately after this video closed. So I once again wish us all the best of luck today. For those who joined us for the first time, I do hope you gain one or two things from what we have discussed so far today. If you did, you of course want to be part of our subsequent editions. The next one is on Monday, where we shall be beginning the new week on a good note, of course, and prepare for the new month as well. And if you are yet to subscribe to the channel, please do so, as I will be dropping some market analysis during the course of the weekend. And of course, we are going to be running our Forex market prep session where we shall be preparing for the new week. So I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. And of course, a beautiful weekend. Bye.